Hello everyone and welcome to this latest video discussion as part of the RICS Tech Partner Programme. My name is Andrew Knight and I've been with RICS now for over 13 years. My role within the thought leadership and analytics part of the organisation is to look at the impact of AI, data and technology right across the built and natural environment. And with over 110,000 qualified members worldwide, working right across that property life cycle, all the way from land, construction, brokerage, finance, valuation, building operations, portfolio management, end of life. It's a very broad spectrum upon which our members are working. And indeed, they work on all the major asset types, land itself, residential, commercial in all its forms, and indeed infrastructure. So once again, a very, very wide-ranging profession. And I'm really glad today to have Evan and Nico join me from Optiml. So welcome to the call, both of you.
Thanks, Andrew. Happy to be here.
Great.
Thank you.
It's always a great, before we get into the bits and bytes, to have a bit of the kind of personal backstory of things. So it'd be great, perhaps if I start with you, Nico, a quick introduction to you and your kind of description of what Optiml's up to.
Yeah, thanks a lot, Andrew. Very much appreciated. So what's Optiml up to and what's my personal story here? So I'm an engineer by heart. So the topic of decarbonisation always caught my attention, always made me passionate about that. And before I joined Optiml, I actually worked for 11 years for the Boston Consulting Group, largely in the clean tech and B2B SaaS space. So working with the large utilities, OEMs, providers or manufacturers of heat pump, of energy components, windmills, on exactly the topic. Nevertheless, I thought it would be not sufficient, and we really wanted to create more and help one of the least digitized sectors like real estate to go a step forward and to decarbonize the entire sector, because to be honest, they are lagging behind today, and this urgently required renovation wave is something that we really need. And I think this is somehow also at the heart of Optiml, to empower this entire industry to increase the renovation rate, step up, and to make the net zero goals work. So this is what we are up to at Optiml, and what drives me personally on a day-to-day basis. It keeps me up at night. So how can we actually solve the deadlock that this industry is currently in? To say, on the one hand, to adhere to ESG targets, because it's here to stay in a kind of a license to play. And on the other hand, also to meet the business requirements, because it's an obligation for the companies to also make money or keep rents low for their tenants. So yeah, I think this is what describes our daily work at Optiml in my point of view.
Thanks, Nico. And moving to you, Evan. That was a great description of Optiml. But what's your backstory, Evan, in a few seconds, as it were?
Yeah, sure. Happy to be here. I'm a big fan of RICS. I went to the first Built Environment Conference in Venice last year, and it was very interesting. Yeah, so I'm a sustainable buildings engineer by training. I've been doing it for almost 10 years now, from the US originally. So everything from heating systems to solar to energy efficiency. And I got really into software and modeling when I did my time at Stanford, and ended up finding an amazing professor that shared my passion for sustainability, the built environment, and smart financial decisions. And I did my PhD at ETH Zurich. So that actually was the core of the technology at Optiml. I started working on this 5 years ago now, crazy to say. At this point, we're 13 people, mostly in Zurich. And the problem that I fell in love with and that I focus on now, committed my career to, is this decision-making problem of what to do, when and where in large, complex portfolios. And we found out early in the process, working with our champions actually at Credit Suisse. So we did a lot of their portfolio analyses at the time. And now over 200 companies that we focused on, is everyone has a slightly different renovation decision process. And it's usually very manual, suboptimal, and Excel based. And as you can imagine, that's definitely not the way forward, not just in the age of what we call Gen AI. So we are an AI company, but based on optimization, which I guess will transition into our panel. But optimization is used in supply chain, operations research, in the military, for many different applications. And I think it's super interesting for real estate because sustainability happens at the component and system level. I think Nico would agree with that as a core engineer. Obviously, humans are in the loop, but that's what we focus on, and it needs to be scaled to the portfolio level if we're going to reach those net zero goals. And we have, 25 years until 2050. I think it's something we've committed our careers to now, to solving that problem, to support our clients to actually make actionable decisions on their buildings.
Thanks. Now, staying with you, Even, is a question that comes up, or a discussion that comes up time and time again in these panels as I talk to various participants in the market, not just in the sustainability and climate tech space, but more broadly across the built and natural environment, is the issue of data, both in terms of its availability, the quality, how it's being collected. How do you think we can overcome this? Because it's such a foundational issue for the sector, in terms of the fact that, for better or for worse, we've not done a good job of curating data and having that kind of information that we need to then make those decisions.
Yeah, I mean, that's a super great point, and especially at the scale of the problem, it's very difficult to solve on a building by building level. I think if you zoom out, and the whole not fad, I mean, it continues, but with BIM, is all about getting structured data. But it's very expensive and very difficult. Now we're at an age where we have to deal with a lot of unstructured data. So AI can definitely help with that and put it into other models that require structured data. So that's something we focus on a lot, and support our clients with simplified onboarding, but also interconnecting to their existing systems like ERP software that might help get the basic things out. But there's a lot of things that they have, like condition reports from a consultant. They have a PDF report in this way and a PDF in a different way, but in the end, it's numeric data that we have to get out. So we try to support this with like a change management thesis, to get them to make smarter decisions outside of Excel, because the more data that comes in, the better decisions you can make, but you need to connect data to decision making. And I think overall, the space of real estate ESG software is quite advanced. Like over the last 10 years, like there's huge companies now in that space, Measurable, DeepKey, etc., who are doing a great job, but it's still not linked to the decision of now what question remains. And we try to help our clients structure that information.
Indeed. Now, I guess it's probably worth mentioning almost that sort of happy virtuous circle there, that, as we all know, AI needs data, and the sector doesn't have data necessarily in the right form, the right format, the right quantity. But ironically enough, used well, AI can help us solve that problem, as you've just described. But that leads me on to the next question, Evan, which is, and I've done a lot of work, particularly in the kind of AVM space in terms of AI models, is how we build trust, because there is that classic issue around the so-called black box, the kind of lack of transparency, lack of explainability. How are you viewing that kind of trust issue of saying, well, actually, yes, we have AI here. It's very clever. It does wonderful things. And we may not be able to be fully transparent in the way it works, but we can reassure people that it's going to give us the right outputs, the right decision making, the right predictions.
Yeah, it's a great question. I mean, it relates a lot to our business model also, is making a software that combines both the engineering elements of buildings and finance. And usually when you hire an engineering company to do a building net zero report, the trust doesn't come from knowing every number. It's that you trust the engineer, the face, the report, the brand, right? So we cannot open up everything, because our clients are not even interested in that. They just want to make sure that it, is correlated to the baseline or a benchmark, or etc. So what we do is we focus on an open data philosophy. That means we share all inputs we put in. We also calibrate the models to their baseline, the building today, and then we allow them to do what's called a strategy designer. So you have the optimal strategies that come out, which minimize cost and CO2. But then you could, for example, say, okay, I want to reach ROI 4.2 and reach EPC level C. And what is the optimal strategy for that? And by having the user play with the model and thus get into the data, change data for whatever they might want, that gives them a belief that this model is, like, in a way, a cockpit they can control, and it's a strategy that they can believe, without just saying, here are the optimal ones, even though they might be the best.
So it's almost like you're putting them in the driving seat and say, you drive the car, you see how it responds to the way you change gear or the way you steer. So it's giving them that sense of the sensitivity and the way that the inputs are driving the outputs. I think that's a really good point. I mean, you sort of alluded there, I think, to some extent in terms of this relationship between the kind of the virtual world and the real world here. And Nico, good to get your sense of how, the role of actual consultants, because I think, as Evan said, you trust the consultant, you have physical building visits. How do you think that kind of relationship between the role of these consultants and physical visits, how is that going to change to enable us to reach these targets?
I think it's two sides of a coin. On the one hand, I mean, also to add to Evan's point, when it comes to trust, we also work closely with energy consultancies and advisories, especially for these very large, projects and portfolios, just to give also the trust, convey the trust to our customers that it's not just a new software, it's not just a new startup, but also it's the people on the side that have worked forever with these buildings and assets and know what's happening in there. So the mixture of technology, AI on the one hand, and the experience insights on the other hand. So that's one thing. And I think in general, how we look at this is that, I mean, whoever you're going to quote and ask, the common sense in the industry is that this established approach of physical building visits and audits is just too lengthy, manual, costly, and not scalable. And I mean, I did my certification for an energy consultant last year for the residential building. I was surprised how manual everything is, how much time it takes, to build up buildings from scratch, manually select from millions and millions of options without having any guidance on what seems to be the best way forward, the optimized decision. And now if I look at very large portfolios, and I'm a company and I do not only need to adhere to ESG goals, but also need to meet my targets like profitability goals or a maximization of value. I mean, how should this work? We really believe that this established approach is just too complex with all the poor data, the high stakes, like the deep expertise that's required for the buildings, also the buy-in that you need in the company from ESG, from portfolio, from asset management, despite often different goals and silos. So we believe going forward, it must change. And for us, scalable solutions like the support of AI is one way forward, and it doesn't mean that the energy consultants will be disrupted. We would even say it's the other way around. So the combination and the opportunity that lies within digital solution and AI, in combination with the expertise and the insights that these consultants have built up over decades, this can be really like the game changer here that removes the hurdles that kept renovations rates low in the past and really enables the real estate industry to meet these urgently required net zero goals.
And in fact, leading on from that, Nico, I mean, I think earlier in this conversation, we've talked about the kind of tension, if that's the right word, between obviously the really important imperative to decarbonise, but also the fact we're talking here, particularly in commercial real estate, about assets that have to perform financially. We have the issues of making sure that we balance the cost against the reward, because these assets still have to perform. They have to generate good market rent. They have to attract high quality tenants. There are obviously issues around finding the relevant time to do perhaps a refit when you have occupied buildings. How do you think the technology will actually help this real world issue of balancing those competing demands of we must decarbonise, but we still have to run efficient, profitable real estate?
Yeah, I think that's a very good question, because I mean, in the past, what we see is that everyone knows how to make a good decarbonization plan and the measures and what to do in a building, like whether it's PV installation or the windows. I mean, the industry has been used to that for decades, so this is nothing new. So I think what's really new and where the challenge comes from, with all the increasing pressure, the need to comply, the pressure from investors, from stakeholders, from the tenants, is more like, how do I, as a company, make sure that my particular goals that are also quite individual and not just the same for every other company, actually meet the ESG requirements that I also need to comply with. So, and what technology I think can deliver here is this kind of optimization between all the different opportunities and options that are out there to really check and test whether future developments, whether the options that I can do, whether the status quo of my buildings can actually, come together and create reliable, so actionable, timed, and costed action plan that a company can buy into because they understand and they believe in these plans and want to make them happen. I think this is a bit what has been missing in the past from our point.
And leading on from that question, because obviously, you know, we can talk probably at length about the concept of green premiums and brown discounts when you look at how market value might be affected by decarbonisation. But obviously, in an extreme case, we'll be looking at so-called stranded assets. And Nico, I'm interested to know how can tech and data help with that kind of identification and management of this risk of the ultimate devaluation, which is that stranded asset, that asset that really isn't perhaps for a particular asset manager really going to fit their portfolio anymore, that they perhaps want to divest that and have somebody else with a business plan take over. How do we look at that extreme example of damage to valuation through the kind of sustainability issue?
Yeah, it's a good one. And I would even go further, not only say it's a damage to valuation, because if we look at the additional, you know, impact that a stranded asset will actually bring to the company, like limited or even no access to capital markets or the capital anymore, higher interest rates, it becomes even more critical nowadays. So, I mean, how we look at it, and also, for example, how our tool works is like we try to identify upfront whether any kind of building can actually meet the requirements of the company, can meet the regulatory requirements in the long run, and if not, there's technology also enables to, you know, identify this upfront before it actually runs into a stranding and literally raises the yellow card or the flag, so that the asset manager can take proactive action to either sell it, repurpose it, or take it out of the portfolio into a different one. So I think this proactive identification of assets that are not yet in stranding, but likely will run into stranding because they will never meet the requirements of the company, is something that data and AI and, you know, more digital and optimized solution can actually deliver, and that a, say, manual energy audit will never be able to do, because the different factors and influencing factors are way too manifold and too complex, and the change is way too fast nowadays to keep up to date with all of that.
Indeed.
I totally agree. Just to follow up, I mean, one thing is I feel like in the last 5 years, you're just speaking to real estate asset managers, they feel like the whole context around the field is changing faster than ever, and they literally use quotes like "the party's over." Yeah. So I obviously, as like I'm in that sense inexperienced, but I'm curious what you think, Andrew. Like, do you think it's like a really rapid evolution of the policy environment now?
I think it is, because I think what we're also seeing is a number of factors coming into play. Because if you think, and obviously this varies by country and jurisdiction and economic sort of backdrop, but when you look at the way that obviously we now have the sustainability agenda, but we also have this changing use of real estate itself, obviously accelerated by the pandemic with, you know, depending on the country, you look at shorter leases, hybrid working, you know, much more flexible workspaces. So, you know, these kind of things were happening before the pandemic, but they've obviously been accelerated to a degree. And I think what that's challenging asset managers particularly is to think about this more active asset management, where not only are they having to think about the sustainability piece, but they're looking at shorter leases, they're looking at turnover rents in the retail piece, they're looking at having to be much more kind of hands-on and much more, not short-term in the sense of a negative connotation of that phrase, but having to think of much shorter-term horizons about how an asset's going to be performing, how they're going to be turning over clients, what those kind of issues are. So I think it's perhaps changed that sort of dynamic in the sense that I think they have to be much more agile, I suspect, in terms of the way they make decisions. I don't know whether that resonates with what you're seeing.
Yeah, definitely. I think they're reserved to do it. I mean, it's changing their job, and for the definitely the older ones, there's fear that comes out of it when we talk to them. I mean, this is a separate topic of like who actually is welcoming digitization and this change and sees it as an opportunity in the market to differentiate versus a threat. I mean, in the end, it is both, but if you're gonna differentiate in this industry, I think you have to see it as an opportunity.
Yeah, and I think if one is going to continue to extract the best value from an income generating asset, which is commercial real estate, I think that does demand, I think, much more agile thinking now. I think you have to be much more agile about the business plans you have, thinking about the way you attract tenants, thinking about how you physically work with your occupiers to maximize the attractiveness of that space, the way we're moving towards thinking about sort of front of house concierge, the kind of services that offices particularly now provides, the mixed use spaces where you're having, maybe it's multifamily plus offices plus some retail space, much more mixed spaces, much more placemaking, where I think of the UK example around King's Cross Station, where that's been a huge development, where it's that quintessential mixed use. You've got a large piece of infrastructure in terms of transportation, but then you've now got offices, shops, gyms, all kinds of residential as well. And so I think it's a much more complex sort of jigsaw of things that need to be moved around. And now we've added that additional piece, which is the sustainability, to make sure that actually we're now adding that additional kind of constraint or demand on it. So I think it is more complex, and I guess that will challenge certain people's thinking when they were used to simply managing assets on a much longer term basis with a much more stable kind of outlook in terms of the churn of occupiers and rent reviews and all those kind of things. So I think it necessarily lends itself to a more data and tech supported environment where you can look at options and look at how things might be and play around with different ways of approaching how you're going to manage those properties.
Maybe to add to that.
Yeah, carry on, Nico.
No, just to add to that, because I think it's also a bit of a mindset and kind of a bravery and being in the driver's seat and becoming like a pioneer. Because when we also talk to players in the market, it's always like this. Best example for me is this brown discount versus brown with green discount. They always see it as a risk, as a loss. But if you turn it around, it also means if you take the decisive steps and if you rely on data, if you rely on technology, you can also use it, to top up and actually create value out of this if you are willing to take the right steps. So it's not only a risk out in the market, there is opportunity if the players are willing and open to take new steps.
Yeah, I mean, I'd agree with Nico. I had a lunch with a number of valuers in London some months ago, and it was interesting to talk about this debate about the effect of valuation, particularly from a brown discount perspective. And what was interesting was that these valuers were trying to turn the conversation around to the client and say, well, actually, let's focus on what we need to spend to get that asset up to a good market value. Let's not perhaps obsess with the damage to value, but actually from a business plan point of view, let's assess what that expense, what that capex looks like to turn that asset into a high performing, sustainable, attractive building. So rather than focusing on this damage to value, say, well, actually, what do we need to do to make this asset perform? And I think that's a different way of approaching it and understanding that, yes, in the current situation, that asset has had some negative effect from a value perspective, but actually let's really focus on not that negative value, but what do we need to spend? What's the plan to get that asset performing to such a point where it is now, almost immaterial to worry about premium discount? You've got a good performing asset that's attractive and will attract good quality tenants and good quality income streams. So it's, I think, a different mindset piece. I think one of you used the word mindset. It's about thinking about it in a more positive way. Well, how do we fix the problem?
Yeah, and the mindset that also means like not only just to rely on software. I mean, and there's so many guests of your webinars as well that talked about it and offered these innovative solutions like the smart senders that can easily reduce the consumption of existing heating systems, like pre-manufactured insulation elements. So like all of these nice, interesting, we sometimes refer to it as low-hanging fruit that don't even require huge renovation efforts and craftsmen coming over months and months and months, but that can already help to lower the energy consumption and demand and make your assets even more green with very low effort and cost. So also have this openness to talk to these proptechs, even more to these companies, to try to understand what they can deliver, often with very low effort.
Yeah, as you say, I think that kind of starting with those low-hanging fruit can be very profitable, and I think also it can justify that journey of getting a return on investment by starting with some very high, as you say, high return on investments, like optimizing the HVAC, which is a very good initial first step for a lot of buildings. Evan, I'd like to ask perhaps a closing question as we draw to the end around the kind of landscape from a kind of policy reporting standardization around data and the whole environment. And I was speaking at a conference in Greece a few weeks ago and talking about the Energy Performance Directive, because I'm very aware that particularly on continental Europe, there is now a pretty forceful piece of legislation in place to drive building performance. But obviously, once again, you have other kind of policies at a country level. You have EPC type regulations, data formats that aren't standardized. How do you see this kind of puzzle coming together when we have these high level drivers from the EU affecting a lot of continental Europe, but still to some extent this kind of patchwork of local and different standards and different ways of measuring things, and once again back to this challenge around data standardization?
Yeah, super interesting question. I think it's actually two separate things, in a way, two prongs. The first is the policy landscape data, and the other is data standards and how they fit into schemas. So I'll start with the policy aspect. So I mean, what the EU is doing well, and thank the Lord they signed this new EPBD recast. I don't know, it's like the 10th time or something, but in it, we have finally a standard energy performance certificate requirement per country, which says what that has to, the sheet has to be. So every country can do it slightly differently, but at least that's there. And it's based on ISO norms. And then, every country adapts ISO norms. Like Germany has DIN, for example. The US has ASHRAE. The UK has their own thing. I think it's called SAP or SPA or something.
Yeah, SAP.
Yeah. SAP, yeah. So that's great that there's this initiative. The norms are still, they're assumptions on a lot of things. So engineers still need to use physics-based simulations on buildings, I believe. I think that will never go away no matter what. So as a company, we focus on that and also the norms, but we welcome any standardization there might be, also for incentive schemes, which sometimes are very difficult to model per country. So there's a barrier of even like figuring out if it's worth doing. So then on the data standardization part, so there's been a lot of initiatives about independent data layers in the building space. I think everyone would welcome it, but due to the split incentives in this industry, it hasn't really picked up traction. It's notoriously hard and honestly impossible to build one-size-fits-all schemas. You have to normalize the data, and it's really informed by the end use, and the independent operators of data are not incentivized to put in the necessary work. There's like a famous one, IPBDI, and not to bash them in any way, but I think it's a great idea. It just never really picked up. So our job as application builders is to curate any data and translate it to customer value. I think in buildings that will never go away, there will be different standards for data, but not for the entire building for every use case.
Yeah. No, and I wonder again whether AI is perhaps a bit of a solution to that, because I tend to agree with you that we will be living with lots of different formats right across the built-in natural environment. And once again, maybe AI will be not the total solution to that, but will help us translate from format to format depending on the use case, because we're never going to get standardized data sets across the industry, across the sector in a granular format that means we can simply plug it in. I think we're going to have to rely on technology to do some of that translation for us. As we come to a close, I just wonder whether you had any final thoughts, Nico and Evan, on the future of what you're doing and the future of the sector and the way sustainability is going to be benefiting from data in tech.
I mean, from my side, and it comes a bit back to this, be more brave, have the mindset, work with more innovative solutions. What we have in mind is also become kind of a go-to for different PropTech and innovative solutions out there. Make it more easier for real estate companies and players that are already quite busy with their daily business, to access these kind of technologies, have them as part of a overall toolkit, and help them really to advance their journey towards a more cost-efficient net zero thing. This is something that we now work on a lot, and where we try to create like a value add for this entire industry. and try to enable them to move forward. Not only with the, I would say, established solutions to decarbonisation, like I said, like heat pumps or maybe solar, but also the more innovative ones. So that's one thing we have in mind and really try to advance in the next couple of months.
Thanks. And any final thoughts from you, Evan?
Yeah, I think I want to double down on that trust element. I think for our startup, that's always such a trade-off between scalability versus accuracy. And I think it's a fallacy to think you will have every single data point on a building. It's just not possible. And some clients do tend to think like that. Where we need to get really good at is knowing what data matters.
Yeah.
And I want to focus on, as AI generally is building trust on the data that does matter and proving that that is the truly valuable thing we should be focused on, and not get lost in the myriad of other things you could do.
As you say, yeah, there are probably a number of critical metrics that really can move the dial in that sense. And if we obsess about trying to boil the ocean, to use that phrase, to measure every little piece, we're never going to get there. And I think the urgency is to not let perfection be the enemy of the good here, in terms of getting,
Nice.
good solutions done quickly, I think. Well, on that
Great
note,
way to close. Yeah.
on that note, Evan, Nico, thanks ever so much for your time. It's been a fascinating conversation. I look forward to catching up again soon.
Thank you, Andrew.